Hello, Ferris here. Welcome to our Startup with Ferris show. Thank you for tuning in. The holidays are behind us. 2024 is in full swing now, and we're back to the grind in a good way. Recently, one of my co-founders, he said, I'm done with New Year resolutions. Every year, I write them all, and I never complete them. But he said, I'm committing to quarterly objectives. I guess this is his 2024 resolution. But he's not alone. Research suggests that 23% of Americans who make New Year's resolutions, they quit these resolutions by the end of the first week. And only 9% stick to or complete these resolutions. So the same way we as individuals are challenged with the resolutions in our personal lives, many founders, many business owners I speak with, they're challenged with planning for their own businesses and improving based on past performance. So today, we're going to continue with the reflect and prepare framework. This is what we covered in the last two episodes, where we talked about applying a framework, a simple framework to help you assess various areas of the business. We spoke about business planning. We talked about process optimization, marketing, sales, risk-taking, and service delivery. So we'll include a link in the description for these two episodes if you missed them, to make sure you're caught up on reflecting and preparing and planning for this year. Today, however, we'll apply this framework to two key areas of the business. One is what I'm calling back office. That's legal, accounting, including taxes, HR, operations, insurance, and then tech and admin. And the second area is funding, lenders and investors. So, and before we end this show, I have an advice for founders. I want to make sure you also take care of yourself. With all this planning, you have to nurture yourself as well. So when we follow this approach of reflecting and preparing, we'll be able to assess if you stayed true to your plans, if you've identified gaps, and also prepare for this coming year. I think this is an important approach to improve your performance in 2024. So if you're just getting started, or even if you haven't started yet, this approach will help you decide your next steps. And a couple of things to note here before we really get started. One is, I strongly encourage you to set aside some time for this exercise, whether you do it quarterly or monthly, it doesn't matter. But every couple of months, every quarter, sit down and assess what happened and plan for the next period. You certainly don't want to go a full year without assessing your business and making incremental improvements. And the second thing, and this is more on the housekeeping side of things, please continue to send your questions to us via the website, startupwithferris.com, or in the comments, and we have a Google form in the description. This way, we get your questions, your concerns, your struggles, and then we answer those in the next show, in the next episode. And two, when you're watching, whether you're watching or listening live today or tuning in later, I'd love to hear from you. Leave me a comment. Let me know about your small and big wins, about the struggles, or any other thoughts or questions that you may have. Now, as a reminder, this live stream, we have it every Wednesday at 10 a.m. Pacific, 1 p.m. Eastern. And we cover a business topic related to entrepreneurship and business. And then we answer the questions that I hear from founders and we get throughout the week. And for next week, that's January the 24th, we will be discussing fundamental ways where you can increase your revenue in 2024. So the introduction is behind us. The logistics are behind us. Let's jump right in. And let me make sure we're good on tech here. Good. All right. So back office, legal, accounting, HR, operations, all that good stuff. I know I'm lumping a lot of business functions together. Now, this is not to undermine or minimize the value of these business functions. They're critical for any business, But for early stage business owners, for early stage founders, these functions are typically less developed than other areas of the business like sales, marketing, and delivery. Now, without a solid back office, you'll end up buried under work, albeit important work, but this work in the back office, it will typically will not contribute directly to the growth of your business. Not to mention the inefficiencies, the headaches, and the time that you could be taking to scale a business. I'm not exaggerating. So let me go over some examples. Hopefully, some of those will resonate with you. And again, if you're running into other issues in terms of back office, leave us a comment, whatever platform you're on, just leave us a comment and we'll address those either today or in next week's episode. So let's start with accounting. Think about what you've done last year. Did you find yourself manually creating invoices and then sending them to the clients, and most of the time maybe very late? Did you spend a lot of time, a lot of hours trying to figure out how much you paid a contractor because it's now time to file the required tax paperwork? In the US, we have 1099s. They're due end of January, I believe. So that's accounting. Just a couple of quick examples. On the legal front, were you scrambling and searching online on ChatGPT, on Google's Bard to find proposal or independent contractor templates and not sure if the one that you used protected you against potential liabilities? Moving on to insurance. Many founders, myself included, when I started my first business, I had no idea that there is so many different types of insurance coverages running a business requires. For example, you need workers' comp insurance, you need general liability. If you have a business partner or business partners, there's something called key person insurance and so many others. So that's one thing to also think about and reflect on. In terms of HR, did you contract? Did you hire? Did you have part-timers, full-timers? Did it work out? Did you have issues? What would you do differently? Those are questions to ask about HR and hiring and retaining the team if you started a team. So these are a handful of examples from a long list of scenarios that could hamper your growth. So I want you to focus on growing the business. I want you to focus on selling and delivering. So if you're busy with other things, you won't have the time and the energy and the mental space to think about growth and scaling. So not only getting busy in back office functions could prevent you from growing your business, it could have serious financial, operational, and legal ramifications that could set you back by months, or I've seen it could force you to shut down. So with that in mind, what is it that I recommend for you to prepare and plan? Let's go over some very specific recommendations in each area of what I'm calling back office. But before we do that, let me check if we have questions that came in. And I believe we do. All right. Do I need to get insurance if I'm currently the only one in my company? Short answer is yes. So if you have, let's say you've incorporated LLC or S Corp, what have you, you want to limit the liability on your personal asset. So one step would be to obviously incorporate. And then once you incorporate, the idea is that you're going to have clients soon. And then with clients, there'll be contracts, and in the contracts, there are terms that potentially where the clients can sue you if X, Y, and Z were to happen. So you want to have the insurance coverage that will protect you. Again, general liability type, injuries or whatnot. If you're renting a space, sometimes the landlord would require you to have certain level of liability. A lot of customers, and I'll go over some examples. A lot of customers will have specific insurance requirements for you, and the larger the client, the more liabilities they typically expect. So short answer is yes. And as I'll go shortly here in the next couple of bullets, I'll go over what I'm recommending for you to do. But short answer is yes. And then finding a trusted insurance agent, I think will be key to address a lot of the insurance questions that will come up. I remember the very first time I think a client asked us for some sort of insurance. I had no idea, so I scrambled, asked friends, asked my network, and find someone who has been helping us, I think, since my very first business. So he's been not just a trusted insurance agent, he's also have become an advisor, a friend actually, over the last maybe 10, 15 years, since we had a lot of needs in the different businesses that we had. So good question. Short answer is yes. And then I'll cover some more specifics here in the upcoming sections. All right. And building on that, the one common theme that you'll hear in this section about how to better prepare for your back office for this year is that you are gradually going to need you're gradually going to need to rely on a network of partners, vendors, partners, who in your ecosystem who will support your business in the respective specialized areas. I know hiring people or getting vendors, it all costs money, and you could be bootstrapping, but starting a business does cost some money. You have to have some budget, even if it's a small budget. And some of these items will limit your growth. So if you don't invest a little bit of money into bringing this specialized talent to help you, you really can't grow the business. So let's talk about accounting first. My favorite, always, because I have so many scars from doing accounting myself. So do yourself a favor and outsource accounting to a bookkeeper. You'll thank me later. You'll thank me when you're doing your taxes and last minute and you're behind and you end up wasting a week looking for receipts, spreadsheets, timesheets, manual checks that you wrote and forgot about, and nothing is adding up. So you'll regret saving money on that outsourcing. So outsource, find a good bookkeeper and outsource your accounting to them. You don't need a CFO initially. You don't need a CPA initially. Maybe when you file your taxes, you do. But initially, a bookkeeper is all you need. Don't do it yourself, and don't ask your nephew Joey to do it. Trust me on that one. Now, whether it's paying vendors, sending out invoices, or fundamentally proper categorization of revenue and expenses, it gets complicated. So I don't want you to muck around with any of it. Let a professional manage it for you. You'll get a report at the end of the year. You'll get a report at the end of the month. It'll have your balance sheet and it'll have your P&L, your profit and loss statement. You as a CEO, that's where you want to spend your time. You want to look at the P&L, understand where the revenue is coming from, look at trends, month over month, understand where the expenses, what's leading to these expenses, and spend the time to analyze this as opposed to wasting your time with data entry. So for more details on accounting, and if you're absolutely cash strapped and you can't afford to pay a few $100s a month, and that's all that you need initially, or if you have more advanced accounting and finance needs, then watch our playlist on accounting best practices. I think it'll give you some peace of mind. So that's accounting. Moving on to the next subject or the next business area, and that's insurance. So in terms of preparation for your next phase of growth, you want to anticipate the types of insurance and the types of coverage you're going to need. You don't want to be stuck in a position where you have a contract from a client. They send you their MSA, their master service agreement, and they're asking you for a number of insurance have a number of insurance requirements, and you're stuck and you don't have it and you don't know what to do, and you could potentially delay closing that deal or losing that deal. And I speak sadly from experience. So there's a myriad of insurance requirements that working with clients require, as I've been saying. As your clients get larger, their requirements are going to be more obnoxious. I remember doing a contract for a major healthcare provider. This is later as we grew. And I think I needed a translator to decipher all the things that they expected us to comply with. So, and I don't remember all of them, but there's your general liability insurance. There's the professional liability insurance. I'm not making this up. Then there's the cybersecurity insurance and so many others. So with the help of a trusted insurance agent, I just mentioned, we were able to gently push back on this client to get some of these requirements, to limit the liability coverage on these requirements, and consequently we lowered the cost to get this insurance coverage. I think one of them had like a $20 million coverage. And I said, folks, we're a small business. It doesn't make sense. This doesn't really apply to us. So we had to do a bit of a back and forth with their procurement department, but they were reasonable. They were good people. And they helped us. Actually, they agreed to, I think, like a $5 million limit. And that cut the cost significantly, the cost we have to pay to get that insurance policy. So my recommendation, again, is find an insurance agent, ask your network, find someone who's been doing this for a long time, who has supported businesses your size. Ideally, also, if they've worked in your vertical, that'd be great, but it doesn't have to be. And then make sure they're licensed in your state. And then when you get an insurance question, send them their way. They make money by selling you insurance policies, so they're incentivized to support you. And a good agent will take you on. You might only have an insurance policy with a few $100s a year initially, but as your business grows, your needs will grow, and a good insurance agent will find you as a good lead, and they will take you on. They'll educate you. They'll support you as your needs grow. So that's on insurance. Next, we'll talk about legal and HR. So you'll need all types of contracts. Proposals and clients contracts, independent contractor contracts. You'll get these things called NDAs, non-disclosure agreements. You'll get things called statements of work, SOWs. You'll get things called MSAs, master service agreements, and many others. So sometimes clients, you might have your own template that you've developed with the help of a lawyer. A lot of times, mid-sized companies, larger companies, they have their own MSAs, their own contract that they want you, the vendor, to agree to. So you'd want to have an attorney review those contracts before you sign them. Again, it's going to cost you a pretty penny, but it's important because some of the terms that you might end up agreeing to in these contracts without the advice, the counsel of an attorney, they might be harmful to your business. There could be some non-compete sections that are very limiting. There could be many others. So make sure you work with a lawyer on these contracts. So that's on the legal front. On HR, as you hire more people, you'll need to protect your intellectual property, for example. You need to have an employee handbook. There are different types of regulations and guidelines that the different states and different counties and different cities they introduce every once in a while. So working with an attorney who works on HR type projects, or they support HR type clients, and then also potentially working with an HR consultant. You don't need these as full-time people, as part-timers. You use them as you need them. They might have a high hourly rate, but it is part of setting up a strong foundation for your business. Now, with the fear of sounding like a broken record, I'm also going to recommend that you find a trusted attorney who will support your business needs. I do have a playlist on working with attorneys. So if working with lawyers is something new to you, I have very specific tips on how to work with attorneys without losing your shirt. So that's on legal and HR. And again, I know I'm covering a lot of topics here. So if you happen to be an early stage founder, you just started the business, or you're thinking about starting a business, those are things to keep note of so that you implement as your business grows. But let's say you just joined us and you've been around the block for a few years and you have a lot of people now and you have other challenges in back office. Do let me know. Send me an email on startupaffairs.com or leave us a comment on YouTube or on the platform where you're listening or watching to this. We've grown businesses to 7 figures, 8 figures. So I don't want to say I've seen it all, but I've seen a lot, and I'll be more than happy to address your question, your concern, your comment that might not be as applicable if you're not a new business owner. Also, don't forget to sign up with the Daily Advisor, our newsletter that is dedicated to early stage founders and business owners who want to grow their businesses. They want to build the business and grow it to 7 and 8 figures. So if that fits you, that newsletter is for you, the Daily Advisor. Go to startupaffairs.com and you can sign up there. Mondays through Fridays, we send it every day. And we obviously have this YouTube channel where we cover a lot of topics on related to entrepreneurship and founders and the challenge that they face and how to grow the business. So we'd appreciate if you hit the like button if you're liking this content and to subscribe to this channel. All right, moving on. So another area in back office is operations and tech. See, systems make our lives easier. So gradually adopt systems and processes to support your growth. So for example, accounting, initially for the first few months, you might be okay with a spreadsheet, but at one point you got to get QuickBooks or whatever accounting system that your bookkeeper would recommend. As soon as you hire people, you need to have payroll. So and there are a lot of services out there. You can, if you have a question on which one to use, just let me know. Leave me a comment. I'll recommend some. There are HR systems to track hours, to track vacation time. And then obviously, if you have a client-facing type service where you have a customer support function, there are also tools and systems to help you provide better customer support and track tickets and issues. So in each of these categories, there are just so many companies out there that provide excellent products. So you don't have to go with the most expensive. You don't have to go with the cheapest, but find something. Again, ask around, ask your network. A lot of these products, they have demos, they have online demos. You can get a free trial, check something out, use them. And then again, if you're stuck and you're not sure what software to use, what system to use, leave me a comment. I'll be more than happy to, once I understand your requirements better, I can guide you in the right way. So in terms of back office, one more thing that is very important, and that is you'll need some administrative support. Maybe not day one, maybe not month one, but as again you grow, as you have more activities and more projects and more tasks, you'll need some help. And I know some founders who leverage, for example, virtual assistant companies, and they're very satisfied with the results. I know others who hire an office manager, sometimes part-time, initially, later maybe full-time, and those office managers, business managers, they're really typically skilled in one or more of the areas I described earlier. So he or she can provide you the administrative support that you need, as well as some managing some or all of the back office functions. So that might be something you want to look at. Again, I wouldn't recommend you get an administrative assistant day one, week one, month one. You gotta just figure things out initially. You gotta go out and be focused on sales and understanding the market and the target audience, and you gotta do some work yourself initially, and then you can outsource the things that are really limiting your ability to grow and expand. So let's see what questions we have. Can I, the question here, can I use LegalZoom for my business? Yes, there are many, actually across all these areas or most of these areas, for example, insurance, or on the legal front, there are portals. There are companies out there where you can go in, and either it's a subscription-based service. You pay them X amount of dollars a month, or they have different business models. But basically, you pay them, and they offer you access to templates, and sometimes they include maybe a set number of hours where you speak with someone who can help you. I think those are helpful. I think initially you're okay with some of those templates and some of those, I would say, generic types of contracts. But over time, as your business grows and as you have more clients and more people, you need your situation would be unique. You need to hear the pros and cons a lot. And in legal, it's not. I used to think of legal when I speak with attorneys. Like, I would ask them a question, they tell me, okay, do it this way, or do it. They would say, do it this way, and it's that's it. Over time, I learned, and my good friend and my attorney, and I've known him, Dan, for over 20 years now. He said, my job as an attorney is not to tell you what to do or what not to do. My job is to assess the risk when I read these contracts and identify, the what's involved here. And then for you as a business owner, you have to make a business decision. So I would say initially, templates and some of these services are good. Eventually, I think finding someone you can pick up the phone and speak with and give them the nuance, give them the context, that would be, I think, is what you'll need as a business owner. Again, attorneys are going to be expensive, but at one point, they'll be less expensive than getting into some legal trouble or having some fines, or getting into a situation where, you have to let someone go and you don't follow the proper, an employee that is, and you don't follow the proper steps and proper guidelines, you end up getting sued and you lose a whole lot of money. So I would say short answer is you can leverage some of those systems initially, some of those platforms out there. Over time, at least my experience is having someone you can pick up the phone and speak with is always something you will need as your needs expand and grow, and as your the scenarios that you deal with will become a bit more complex. All right, so hope that's helpful. So that was the first part of today's session about the back office. Again, to summarize, reflect on where you spend the time around accounting, insurance, legal, HR operations, and then just jot down everything and anything you can potentially outsource. And even if you don't have the money to outsource right away, gradually outsource some of these things that someone else can do for you, and especially these things that you don't like doing, you're not good at. I think it's really important to have someone else do it on your behalf, so you can focus on marketing, selling, delivering, and networking, just growing the business. All right, excellent. So now the second section is about funding, about money, about lenders. So that's something we covered a bit, I believe, in the last episode. We covered a little bit about looking at your profitability, looking at your revenue. So what I'm covering here is not that part of it. It's more if your business is in need of funding. In your business plan, I'm going to assume that you have a section on your financials, the upfront startup cost, some ongoing expenses, lead acquisition costs, and other things that you plan for. You should also have planned for like your sales plan, your expected revenue, your cash flow. You sell, you have expenses, clients pay you. So how's the cash flow situation there? So that's all should have been, at least a version of it should have been in your business plan. Now, if you haven't done any or all of the above, then refer to our playlist on business planning. And then for all these things I'm referring to, we'll leave the description. We'll leave the links in the description so you can check those out later. But I want you to take a minute here and reflect on the previous period, the previous year, and ask yourself these questions. Did my actual expenses exceed my planned expenses? If so, revisit those assumptions. Are you running very low on cash month in, month out? You can barely pay rent. You can barely pay yourself, or if you have contractors or excuse me, if you have contractors or employees, you're kind of sort of running month to month or pay period to pay period, and you're late on paying. Like those are maybe not easy questions to think about or to reflect on. But if that's the reality, then make note of that. I'll give you some recommendations in a little bit. Also, are you finding yourself stuck without the means to invest in equipment and software, or even invest in hiring a part-timer? In terms of paying yourself, did you take home as much as you had planned for and as much as you needed? Or did you have to make additional sacrifices? So just a few questions for you to think about. It's definitely not an exhaustive list about funding and financials, but these are some basic questions that you want to ask yourself periodically. Not every day, not every moment. You want to be paranoid about finances, but maybe at the end of the month, at the end of the quarter, definitely at the end of the year. And with these questions and others that have to do with the availability of cash, with the way you're spending money, the way you're bringing revenue in terms of preparation, check for the project that were very profitable, for example, and see if you can start marketing and pivot, not even pivoting, just focusing on the types of projects that were very profitable. And maybe assess the types of projects that were not very profitable and drop those, or gradually get out of that maybe service that is just not very profitable for you. If you, for example, if you're, you could be in my mind, you could be in one of those three positions. Just to summarize how I wanted to think about it. You could, last year you were very profitable. You met your financial goals, and it's all dandy great, right? That's number one. Number two, another scenario, you barely managed your finances. It wasn't anything to write home about, but you managed. And the third scenario is you're in the red big time. Every month you had to borrow more money, you had to tap into investors and into your investment, and just things were not going well. So for the first two scenarios, that is, you were very profitable. For the last two scenarios, which is if you were barely managing, barely making it, or if you're in the red the whole time, it's important to take time to assess the viability of the business. I won't have a lot of time to spend on this today, but we do have a video on this called, if you're struggling, is it time to pivot, quit, or double down? So check out that video. We'll leave the link in the description. But if you still see the potential of growing this business and you're committed to doubling down, and bootstrapping is not an option because you've exhausted all the means, then maybe it's time to inject some cash in the business. Now, this topic requires its own episode, and we'll do that in the future, but I do want to give you with some quick pointers on ways to get funding. For example, in life, in business, there are always trade-offs. So with every decision here, if you're going to if you want to get some money in, you might have to either get a loan, or you might have to give up some equity. So that's a trade-off. So can you still survive without getting any equity? Can you giving up any equity? Can you double down and bootstrap and work extremely hard and harder maybe for the next quarter, and you'll make some revenue, some profit, and you don't have to give up some equity. So those are decisions for you to make. But I'm going to list certain different ways for you to think about getting funding into your business. So one would be finding a silent partner, someone who has resources, they have money, where they'll fund the business, they'll fund your salary, but you have to give them some equity, of course. Potentially, you can find a working partner, someone who will work with you, but maybe they know you, they trust you, you've worked well together in the past, and they'll be willing to take a salary cut until the business is profitable. So this way, if they have a lower salary, and maybe also you have a low salary initially, then the expenses on the business are manageable. A third option, again, it doesn't have to do with equity, is finding investors. Now, keep in mind that the type of investors and the type of investment is going to vary widely, depending on the type of business that you have, product or service, early stage, late stage. So again, we can talk about this later. But if you're in the process of getting funding from investors and you have specific questions, leave me a comment. I'll be more than happy to answer. Or you can just send us, if you want something more private, just send us an email on startupaffairs.com. And for those of you who are listening, it's Feras, Feras, my first name. And I'll be more than happy to give you some specific guidance. Now, in the above options, whether you get a silent partner and an active working partner, or you get investors, you are giving up some equity. And this is important here. Big caveat is, whatever you do, be very, very judicious in offering equity without a fully thought out plan and the legal documentation to support it. Again, I have a playlist on partnering, and I cover some equity considerations there, so you might want to check those out. Now, back to the sources of funding. If you don't want to give up equity, that's fine. Other options would be getting loans. Obviously, look for loans with favorable terms, maybe for the SBA, the Small Business Administration, or other entities. Another option would be to save and cut. Not passing judgment here, but this sounds boring, but it works. Figure out the bare minimum that you can live on and just end up spending less. This might require sacrifices on your own, and sacrifices, maybe, with your family. So be ready, be ready to discuss this with your family members. If you're going to cancel this vacation, it's not going to fly well with your family or your significant other. So maybe instead of going to a 1 week vacation, go to a 2 week vacation, 2-day vacation instead. Those are options for you to think about. But money has to come from somewhere. So if you don't want to give up equity, you don't want to get a loan, something has to give. And then last but not least, and this is, I would say, a last resort. This is more drastic, but potentially you could borrow money from your 401k plan, from your retirement plan. Again, I don't recommend you do this as a first step. This is a last resort. This is if you're very financially disciplined and the business idea, you vetted the idea, you're sort of on the cusp of making it, and you just need a little bit more cash, and you can't get cash from anywhere else. Maybe tapping into your retirement account is okay in that scenario. And I can talk about this from a personal experience later, not on today's episode. But that's one option. Opening a credit card account. See if you can find some great offers with maybe zero APR. There are a lot of sometimes zero APR offers for new businesses. So that's one option. But again, be aware of what's involved with that. This monthly payment will add up a lot over time. I also use that option. Luckily, fortunately, we were very disciplined, and we were able to pay off everything we borrowed without having to pay interest. So it was really good for us at the time. And last but not least, you can borrow against your home's equity. That is something, again, I sort of hesitate to mention, because there are significant ramifications, not just on the business, on your personal life as well. So don't take any of this lightly. But I've seen people who have done this and they've done well. And I've seen those who have done it without the proper without the proper due diligence, and they were a bit, I would say, not very well prepared, and that caused them some serious personal and relationship damage. So be careful when you are thinking about this option. And we are close to wrapping up this episode, but I believe we have some questions. So let's see what we have. So this goes back to what I mentioned earlier about profitability. So how do you calculate project profitability? Profitability, you basically have revenue minus expenses equal profit, right? So when it comes to this for business, and then your bookkeeper will give you that P&L statement, profit and loss statement. But for a specific project, you have to look at what's involved in your service, and then look at you want to turn that into a dollar amount. So for example, let's say if you're selling a product, very simple. I sell this, I don't know, I sell this gadget I buy it for 50, I sell it at 100, I make $50 in profit, but there's some other costs associated with rent and electricity and my computer. So at the end of the day, I might end up $30 on this gadget. But in services, since we talk about services, initially, your time is the cost. Your time is what you're spending. Now, if your service includes delivering a physical asset, maybe an equipment, and then that obviously the cost of that piece of equipment or whatever is it that surrounds your service. But let's just talk about your time. At the end of the day, I think you put let's say an hourly rate. Let's say I want to sell my services at $150 an hour. So if you can sell X number of hours a week, let's say 40 hours a week, billable hours. So that's 40 times 150. That's $6,000. So that's the revenue that you bring in. Now your time has a value. So you put a number, like what is the cost of your hour, right? So there are different ways of doing it. But if let's say you and let's say there's obviously expenses around the business. If you're renting, if you have equipment, if you are, we talked about back office a lot, so you have to pay money for your attorney. So there's all these costs associated with your business. So those have to be applied across all the projects, right? So in a simple formula, we would put I've sold a 10 hours to a client. I put 10 hours because I sold 10 hours. So there's a cost associated with my time. And then there's a portion of the overall business operations that also has to go against that formula. So there's a direct cost, basically your time, and anything else that has to be done to deliver the service. So this is all part of the expenses or the cost of delivering that service. And then there's another item that is the cost associated with running a business, and a portion of that would apply to that project. So I would put a simple spreadsheet. I would make an assumption for my hourly expense. And then, so if I'm selling at 150, let's say for me, the cost, it has to be at least $100. Then my profit for that project is going to be $50 per hour. So if I'm selling 10 hours at 150, that's $1,500. My cost for my time and everything else around the business is $100. So I'm going to make 1,500 minus 1,000 is $500. That would be the project profitability. So that would be one way to do it. There are other ways to do it. Maybe we should spend. I'll make a note to spend. Maybe to answer that with some chart or some formula and some maybe a spreadsheet next episode. This way you can have an actual example to see it. But there are different ways of doing it. If you obviously once you have more people, it'll get a little bit trickier. But you can always and you should be always tracking the direct cost that you are spending against the hours that you're selling. So if you hire someone and you're paying them $50,000, There's an hourly rate for that, including, again, all their there's a loaded hourly rate, their salary, the benefits, insurance, 401k, all of that is bundled. And then you can calculate how much this person, the one you hired, is going to cost you per hour. And then that has to be included in the formula. So I'll have some examples in the next episode. So make sure you, again, subscribe to this channel so you can see so you can get answers to your questions. All right. So before we wrap up here, let me just see. I think we have another question, but let me finish this one final thought here. This final thought is about you, the founder, the business owner. See, startup work and growing a business in general is very demanding. And I'm all for working hard. As I always say, a 40-hour week is not for founders. It ain't going to cut it. So make sure, with that in mind, I still want you to make sure that you don't bore out or you burn out. So this coming for this coming year, make it a priority to work hard. Of course, at the same time, find time to nurture and grow yourself across 4 different areas. Intellectually, that sense of curiosity, you got to develop that the hunger to learn. It's important, and there are different ways of doing this. For me, it's books. I love to read. I love to listen to audiobooks. So that's what keep that curiosity going in my mind. Also, so intellectually, then emotionally, the relationship that you have outside of work, your family, your friends, it's important to invest time into these relationships. For me, my family, my spouse, children, and also my commitment to the nonprofit world and being involved with whatever time I have. A little time, sometimes I have more time, but invest in these relationships. After that, spiritually, you gotta connect with something bigger than you, whatever that is, whatever your belief system is. But it's important to also nurture the spirit. For me, every day, take out some short periods of meditation, prayer, again, whatever works for you. But for me, it's unplugging for a few minutes and connecting with the higher being and just forgetting about the world and just really calming your mind and yourself down. It's just very energizing. And then last but not least, physically, I know everybody talks about, getting stronger, staying healthy and fit. That's important, but I kept it to last on purpose because it is important, but it's not. We gotta grow intellectually, emotionally, spiritually, and physically. So physically, work out, whatever that is for you. It doesn't matter. One common thread across the Fortune 500 CEOs, the one common thread is that most of them, I forgot the exact number, I think more than 90%, they work out. So working out is important, whatever that is, whatever works for you. For me, it's Aikido, archery, outdoors. I just love it. So entrepreneurship is a marathon. It's not a sprint. So invest in all of these areas so that you can thrive and just be there and be stronger just in the long run. And I know to do all the above, you'll end up having less leisure time, maybe less Netflix time, but I think it's much more fulfilling, and it will be very rewarding. So that is it. Before we wrap up, I believe we have a question, so let's address it. So how much equity does a silent partner get typically? So how much equity does a silent partner get typically? It's going to depend on what they bring to the table. So let's say you need $100,000. So there are a lot of factors, and let's say you're just starting. And that $100,000 is very critical. So they're going to negotiate to get a larger part of the pie. That's different than, let's say, you are doing really well in your business and you're profitable, but you don't have a lot of extra cash. So you need an investment to maybe start a new service. So that same $100,000 will mean a lot more to you early on, and the investor will end up taking a larger portion, then when you have, let's say you have $500,000 in revenue, and and you're profitable and you need $100,000, you don't have to give as much equity then. So there are a number of factors that are involved, whether they're silent. I mean, obviously, if it's a working founder, they're putting sweat, not just money. So they have to be compensated for that, for their work as well. But I would say it's going to depend on if you want to go sort of the technical route. If you bring a technical route, there's a valuation of your business at the end of the day, and the money that comes in is going to be added to that mix of valuation, and then they'll get a percentage based on that valuation. That's at a very high level without going into a lot of the details. So I think you can say that this idea is worth a whole lot, and if you can convince them that it's worth $10 million and they give you $100,000, then they're getting 1%. I know this may be exaggerating, but if your idea is and everything that if it's worth like $200,000 and they're going to give you $100,000, then they're going to ask for 50%. So it's something that I think you'd want to speak with someone who is familiar with investments and potentially, if you work with a CFO who was involved in mergers and acquisitions and involved in investing, he or she might be able to give you some specific guidance based on your situation. One thing to keep in mind is when you're getting a silent partner or an investor or even a working partner, and they're also injecting cash in the business, don't just look at the cash, look at what else they can bring to the table. So if you have 2-3 options of people who will 2-3 options of sources of funding, don't just think about how much percentage of the company I want to give them or I want to negotiate for. Also look at what else do they bring aside from money. They might have an amazing network that they can introduce you to. They might have maybe they have access to specific clients. They might have maybe access to a pool of people you can hire from. So look at what else they might just have. They might be very strategic in marketing, and they can help you set up a marketing strategy. So I would say evaluate the tangible resources they give you, money that is, and also what other soft skills or other types of resources they can help your business with. So no specific answer to this. It does depend on a number of factors, but I think on your end as a business owner, show what you have. I think asking for money really early on, you might have to give a whole lot of equity. Later, as you've developed some revenue stream, some profitability, you have some processes, then you have a better sense of the outlook of the business, and then you can have a certain valuation, and then you can obviously negotiate a favorable term and a fair term for you and for your partner, because you said it's a partner, so you don't want to outsmart them. You don't want them to also, it's not about who's going to get like one more percentage or one less percentage. It's about something that's going to make both parties happy. So I think that's the last question for today. So great. Let me just recap. We covered this reflect and prepare framework. We covered the back office, legal, accounting, HR, operations, tech, and admin. We also talked about lenders and investors and funding. And then we talked, my final thought was about you, the founder, the business owner, to make sure you take care of yourself emotionally, intellectually, spiritually, and physically. And don't forget to sign up for our live stream. We have it every Wednesday at 10 a.m. Pacific, 1 p.m. Eastern. And we cover a business topic. Next week, we are covering the fundamental ways you can increase your revenue in 2024. So make sure you join us then. If you can't, you can turn notification on YouTube. You can also submit your questions around increasing revenue and the challenges that you have, and we'll be more than happy to answer those questions next episode. And don't forget to subscribe to the channel, hit the like button on this video, and also go to startupwithfaris.com. Again, Faris spelled with F-E-R-A-S, and sign up for the Daily Advisor, our newsletter, to help you grow your business. That's it for today. See you next time.